Okay guys, the first thing I would like to say is that I am sorry. I clearly made a mistake in the last video. I was expecting a move to the upside before our macro took over and took us to the downside. We see now that we had a pretty significant move to the downside. We've lost the 20k area. We are now below $20,000 BTC. This isn't unusual. We were kind of expecting a move like this. The only difference really is that I was expecting a move up as per yesterday's video, a bounce before we do drop down. So I'd like to apologize on getting that wrong. So in this video, we're going to jump back down into the data of Bitcoin here, find out where I went wrong, get the structures all mapped up to where they need to be, and then reassess what I think is likely to happen next. We'll take a look at the market, both from an Elliott Wave theory point of view and from a smart money concepts perspective. If these are alien to you, check out the courses I've put together at 𝗕𝗘𝗪𝗏𝗀𝗀com, linked in a description down below. If you're looking to trade, then why not check out BitGet, also linked in a description down below. They are offering a cashback offer at the moment. So if you deposit 50 USDT, you'll get $10 USDT as cashback. And they also have a whole host of additional sign-up offers as well, all the way up to $8,000 on sign-up bonuses. So check that out if you're not already trading on BitGet. We are obviously going to be doing a lot more with BitGet. We actually have a competition, a weekly competition that will basically be reoccurring every single week in our Discord server through BitGet using the affiliate link in the description below. So if you're a trader and you're looking to take part in that, join us in Discord, sign up to BitGet using our link, and you'll automatically be entered into our weekly competition to win 100 USDT every single week. And that is an ROI percentage, and the one who has the most ROI percentage during that week will win. So check that out, linked in the description below. Let's get right down into this one, right? So yesterday we were talking about a move to the upside to happen when we got into this little yellow box area here. This is 21,441 to 21,526. You can quite clearly see we tapped it once, which I thought was fine. We were kind of on track here. We tapped into the high end and then we moved up, and then all of a sudden we just completely crashed down. There's a lot of reasons for this, about various different things that have been going on in the real world. So it's not a surprise that the market was spooked and kind of did this, but it does change our structures. And it basically means that something along the lines here on Elliott Wave theory was incorrect. And I think I know where that is going. Okay, so what I'm going to do is I'm going to first of all address this 5-wave structure. From a few videos ago, weeks ago maybe, I was saying that we'd have to come down lower than $21,351 to prevent us going up into any further highs because of this 5-wave structure. If you start with 5, you end in 5. What we didn't know was whether this was the end of a structure or the beginning of a structure. We can now confirm, because of this move yesterday, this is an end of structure, which basically means it's an irregular flat correction in my opinion, and it would basically be here A, down here for B, up here for C, irregular flat, and it's done. So we don't have to worry about that. I will of course remove in fact all of the things that are going on this side, as we don't need those. And so now we need to address what's going on in here, and I think I can kind of get a good idea as to kind of where things are going. So straight off the bat, we don't really have a good structure in this point, but we kind of have to acknowledge that we have this structure here on a bigger scale. Okay, so although we haven't got a good micro count here, we need to acknowledge that we do have this kind of structure emerging, okay, right inside here. And I do want to kind of illustrate here that we have a very interesting structure also from this point up here, right? So we do have a 5-wave count right here. Okay, we can go 1, 2, 3, 4, and 5 right inside there, truncated at the end. And we can kind of see that. That allows us to think, okay, we've got 5, we go up in 3, quite clear 3, and then we come down here in what appears to be a wave 3 situation. And the reason I say this is that we end up with a wave 1, wave 2, all of this has to be our wave 3. We then have to go up into 4 and then down into 5. And then we get even more compounding going on here when we start to think about what is potentially going on here. Now, I don't want to kind of get into this little section just yet until we get confirmation of what is going on here. But it could be that all of this is also getting nested down inside this little structure, like so. Okay, now it's a very unusual structure, so I don't want to go into that just yet. I want to see how this kind of plays out. But at the moment, if I remove this one, we kind of want to focus here. Okay, so we can kind of see that we have this impulsive trend now to the downside. Something that we kind of have to acknowledge. Something that is not unusual, something that we were expecting. I was just expecting a move upwards before we moved down, because what I was thinking was actually this was starting somewhere over here and we're going to do something like this, right? And that wave 2 just never happened. And that would actually have happened somewhere down here. I was looking at this as a kind of, where I find it, I was looking at this as a 1, 2, 3, 4, 5, and then I was looking for a bounce up here for a wave 2. Obviously that didn't happen, and instead what we've gone and done here is actually moved down, and the only way to articulate this, although this doesn't make sense at this load point, it has to kind of look like this, and this is because we hit that 1.618 level. If I go ahead and take this into consideration right in here, you can see that we come down to this 1.618, and we haven't even finished this 5th wave yet either. Okay, so as I think about this, and there's a 5th wave inside that 3rd wave, sorry, I should be really clear about that. We haven't finished yet. Okay, so we have a 4th wave to come up, but not yet. So let's go down and dive into this move down here, right? So we can kind of see that we have this kind of structure appearing. We have an overbought stochastic RSI here. So we come up, we've come down, we've bounced up, and it looks like this is going to be some kind of diagonal structure right at the end. So I'm expecting this to come down just a fraction more. I will try to articulate that. That's perfect one right in there, so that's okay. And I think we're going to have to come down just that little bit more, more towards the kind of 19,500 approximately, 19,005, 19,006, something in there. It's going to be a little bit fiddly right towards the end, but essentially that's kind of where that looks. So then we move up about 38.2%, which will be typical. So if I come up into here, throw this onto around, we'll take that level there, we'll basically be able to look at just kind of push past that $20,000 again, 20,700, before going down after that, approximately. But again, these are all just going to be kind of subject to change as time progresses. We'll then measure that wave 4 theoretically, and then we'll be looking at 18.9 to about 19.3 approximately. So it'd be something like that. Then all of that would basically mark our wave 3 situation out of a much bigger scale. So we can kind of see that scaling down. So although we were kind of expecting a bit of a bounce to the upside, it looks like the market got spooked a little bit earlier, and we've now changed this structure. Although we're kind of following a more corrective pattern, we are now following a more impulsive trend pattern downwards. And this is potentially even more dangerous than thinking about the whole market as a corrective string. Okay, so for now, that's kind of where Elliott wave theory sits. It is, of course, going to be, you know, interesting to kind of see how these develop, because we will have basically always 3 moves to the downside with 2 counter to the upside. So we've moved down. We'll be looking for a wave 4, which will go up, and that will be 3 waves in itself. And then we'll come down again, probably in another 5, could be a diagonal of any sort as well. So just going to keep a close eye on that. Then we'll go up, then we'll come down again. And ultimately, now we've kind of got this structure where we're starting to see these 5 waves. We could end up in a situation where we basically start seeing essentially a lot more 5-wave structures. So a 5-3-5-3-5, okay, ultimately is a 5-wave structure, and if you start with 5 waves, you end in 5 waves, so you'd expect it to be a minimum of a zigzag pattern. And as I kind of zoom out of this, you can kind of see where we're heading, right? You can kind of see the scale of this potential move to the downside is rather big. So if we were to even think of this as a corrective zigzag, then we're kind of be coming right down into our yellow box area that we were talking about yesterday in the afternoon video, I think it was, which is basically $10,000 to $16,000, right? And it's not a huge stretch to kind of come back down into these ranges. So all looking pretty good from that point of view. Now, if we jump over to smart money concepts, one of the things that we were talking about yesterday was how we got confirmation of our downward trend. So essentially what we've got here in smart money concepts was a change of characteristic, okay? This was basically going from a bullish state to a bearish state. Okay, so we can see that. We then got a BOS on the chart here, which is a break of structure. As I like to think of these actually within the Lux Algo indicator, this is more of a CTS, a continuation of the trend. Okay, so change of characteristics basically is reversal, and then a BOS here is confirmation that we are going in that direction, right? So what we see is we have a change of characteristics. So we went from bullish to bearish, and then we confirmed that with a break of structure. And then we confirmed that we'll continue in this move to the downside with another break of structure. And well, we can see where we are right now. Okay, not only did we have those things, we also had that weak low and we have a strong high. So our premium area here, where people would be paying premium pricing, which you can see right going on over here, this is something that retail investors have been doing for a while because they believe they've been in a bull market. And, you know, there's a lot of comments. I'm not going to go through them in the video, but, you know, there's lots of comments over the last couple of months with people saying we'll never see $20,000 again. Well, here we are with $19,000. It was not a bull market. I've been talking about that for a while. Okay, this is not just a regular dip either. Okay, so bear those things in mind. Now we have a strong high, so that's not likely to get broken, although we've left that in the dust a little bit, and we have a weak low, so expect further downside there. Equilibrium is also on an imbalance on the order books. These red areas that you see on the chart here, and here, these are essentially imbalances in the order books. Basically, so much selling pressure occurred in these areas that there were very limited or no buying in there, and price jumps from the high side to the low side of this gap. This gap is then left behind. It's called a fair value gap, and price will naturally want to come back and fill it. So one of the things about these 5-wave structures that we've been talking about is price will want to come up here in those corrective patterns. Okay, so we will have wave 2 will be really deep. We'll have a wave 4 that's 38.2% retracement, so expect this area to kind of get filled out, essentially. And then when we have a bigger move to the upside, you'd expect these areas to kind of also get filled out as well. Okay, so ultimately we'll come back and we refill these. This isn't anything unusual, with something that we will expect. Now, as we kind of continue to move down here, we'll end up with another break of structure after we bounce and come back down again. So that wave 4, wave 5 situation that I was talking about over here. So this little wave 4 right in this one. Okay, and that wave 5, that will basically create another break of structure. We'll move up and then we'll break that structure and continue this trend to the downside. At some point, though, we will end up with a bigger corrective pattern moving upwards, and we will take out some of those larger areas. So ultimately, we are in a very bearish way here. Now, we are on the stochastic RSI oversold on the daily, 8-hour, 4-hour. Okay, so I am expecting that bounce still to occur. It is something that has to happen. The only difference is really we've now changed our structure a little bit. Okay, so we'll see a couple of bounces, but I'm not expecting anything of significance. Now we've lost 20k, I think it'll be very, very difficult to breach 21k. Okay, we can kind of see a lot of resistance in this $20,000 area. We can consolidate on it and get rejected from it, and it would also tie in really nicely with a 38.2% retracement of typical of a wave 4. Only once we've done all those things and we actually get into the end of a final 5th wave, as in we've completed a 5-3-5-3-5. So if we think about this structure here, we can kind of see it. We've gone down 5, gone up, gone 3, we're going 3 up, we're going to go 5 down, we go 3 up. We have to have another 5 waves down. Only once we do this structure will we end up with a much larger correction, maybe pushing back up into those 22s, before we then go ahead and do a much deeper retracement, go down into new lower lows and all that kind of stuff. Potentially even just retesting. Now, at this point, we don't know whether or not we end up with a zigzag corrective pattern of 5-3-5, or we end up with a deep trend of 5-3-5-3-5, all of which is possible inside of our Z wave here, taking us into these lows. Because if it's a larger kind of 5-3-5-3-5, then we bounce up and then we go down into another large 5-3-5-3-5. What we end up with is potentially that $10,000 Bitcoin. Obviously, this is very early days. We don't know for certain, but the structures are kind of indicating to us that we should be thinking, unfortunately, much, much lower in prices. But that comes with fantastic opportunity. Some smart money concepts, if we roll this up into a 4-hour chart here, we'll see some different order block areas. We can see these ones that were left behind, and we have a bearish characteristic change here on the 4-hour now. Again, this is something that was missing on the 4-hour, is now here on the 4-hour. We can obviously see that we are coming back down into this fair value gap that was left behind. So again, you can see now that this is one that's likely to kind of get filled out if we do hit those 19.3s, get rid of this order fair value gap, that's over here, this imbalance in the order book, get rid of this one, and then we'll be thinking about these two down here as well. Confirmation that we've now changed trend from bullish to bearish on our 4-hour. On our 8-hour, I think that was always going to be the case anyway. Oh no, we haven't really got a signal on that one yet. It'll be interesting to kind of see when that one comes in. We've got the minor ones in here as well, so they're continuing. We have the big order gaps here. We have those same as usual, so nothing too much from there. From a 12-hour chart, again, we haven't got confirmation of a bigger reversal yet. We do have obviously this order block, but this fair value gap down here, and with this one here as well. So ultimately, everything's kind of coming together quite nicely from that point of view. On our daily, Again, same two blocks, fair value gaps, these imbalances, these still are existing. We have our bearish traits that were never changed either from a bigger macro. So when we're on this daily chart, we can see that we were bearish, we confirmed we're bearish, we never confirmed we're bullish. And so from our macros, we knew that was always going to be the case. So essentially everything on Bitcoin at the moment is looking pretty good for bearish traits, which is kind of what we've been talking about for a while anyway. So nothing terribly too unusual there. The only thing I do want to kind of apologize on is I was expecting a bounce, and in fact the structure changed impulsive rather than just corrective. So that's on me. I do apologize for that one. And it's really important on this channel that we're incredibly honest. If I make a mistake, I'm going to tell you that I made a mistake. Take the bad with the good and all that wonderful stuff. Guys, I'm going to leave it there. If you found it useful, informative, smash that like button. If you're new to the channel, subscribe. If you're looking for more information on how to kind of trade, then why not check out BitGet, linked in the description down below. Join us on our weekly competitions in Discord. Why not also check out Cheeky School, learn a little bit more about Elliott Wave theory and smart money concepts. Check out the memberships as well, YouTube, Patreon, why not? Until the next one though, guys, have a fantastic day.